Welcome to another installment of Dougie's swing trading information. This is part two from last week. Doug had just too many words to get out, and so he's got some more tonight. Actually, it's great stuff. It's really good material. Hopefully, you've been keeping up. I know it's a lot of information to absorb, but Doug does a really good job with it. So I will shut up and turn it over to Doug.
Well, thank you very much, Joe. Appreciate that. How are we doing, everyone? If everyone could just throw a couple Y's in there, if you can see the screen and hear my voice, make sure there's no audio troubles. Yes, seeing a bunch of S's. Subio Nani, is that the Subio? Marta, oh my goodness. Hello. How's everyone doing tonight? Now I'm really excited. Wow. I mean, I'm excited to have everybody here, but Marta, haven't talked to you in a while. We got to hook up later. Okay, to start things off, as usual, I got to read the disclaimer here. Just so you know, nothing presented in this webinar or video presentation, either vocally or visually, is to be taken as trading advice. Everything in here is for educational purposes only, with the hopes that you're going to take this, flashcard it, go back in your charts, mark it up, and study it. Of course, no representation is being made here that any trading account will or is likely to achieve profits or loss similar to any discussed in this webinar, even though there are none. And by continuing to watch, you agree to the aforementioned statement. All right. Hey, Attican, how we doing? Okay. So we have swing trading 4.2. Actually, let me get rid of the console there. Of course, in the BTMM style, as per usual. All right. Now, first, I just want to cover a couple questions. Actually, just one question, really. Basically, like, one of the things that came across is people have actually been turning in the homework. That's great. People are getting it. They're seeing it. But, there's a couple things that people took, which, all in all, were actually fine and didn't really work out. And basically, the question was, doesn't this trade that I took have all your stuff, all the confluence of events at the vital area of interest? How come it only went down X? Why didn't it go to the moon or go to the floor? Well, again, these are just the highest probabilities, and what happens oftentimes with a level 3, these peaks that we're looking for, depending on the market context, if you're in a trend or if a new trend is about to start, these wonderful setups can just turn into what? A reset. Okay? Now, I haven't covered trade management yet. That's two away. I was just talking to Joe about that. Next week we're going to cover not next week, in a couple weeks. My next presentation I'm going to be covering larger structures, but after that we're finally going to get into how to really manage the trade. And one of those, I'll just give you the clue right now, when you're taking a P formation, which is one of the only two you really want to consider yourself with regarding swing trading, P formations and safeties, and I include resets in P formations. We're going to be covering that tonight. But if you're taking a P formation in hopes of a reversal of the current trend, whether it be short-term or long-term, you want to start to get out at the middle of the structure, whether that be the neckline of a head and shoulders or the middle of an M or a W, the apex or nadir. I'm going to be talking about that, and I scale out for that very purpose, because if you catch a beautiful peak formation that has everything, it could be turning into a reset. Resets present as level 3. They present as beautiful trend reversals, and then it just kind of stops. And it usually stops at the middle, some other places. We're going to look at that, but just so you know, most of the trades that came my way were actually pretty damn good. It just so happens that they're holding the level, and you're going to see this happens a lot more they can happen longer in the actual crosspair. So just keep that in mind, all right? So now getting back into the market phases, which is our H4 roadmap, but of course all the stuff that I'm talking about specifically with the trends tonight is going to be applicable to the H1 as well. We're going to look at a couple examples. But as I already said, tonight is trend. Quick question, though. Despite all the different characteristics of all the different things we need to look at to consider whether you're in a trend or a range-bound market, what at its core is the single solitary primary difference between trend and range bound? Nobody? I know you got it in you. Someone saying sideways or up and down. Range stays within a certain amount of pips. Well, trend has a direction. Somebody break of previous limits. Okay, what happens at a break of previous limits? All right. All right, think about this. Range bound, we saw that a range bound on an H4 will provide nice 3 levels rise and 3 levels drop on the H1, right? Okay. So you get intermediate trends. You get trends on the H1 during the H4 range bound. You get those market maker cycles, the market maker trends. Yeah, the trend is someone saying that a trend is more like a continuation in one direction. Right. So, good, Tim. I've been looking at the H4. Good. Exactly. Stephen Shelley, knocking it out of the park. Resets. That is the primary difference, because you will get intermediate trends in your range bound. It just so happens that they actually reverse at the peak, whereas the reset or the trend, what happens? You get a peak and it just fails and it keeps going. Okay, so that's really the primary difference. If you can identify a trend in a range bound, and you're able to identify the peak formations in a range bound, you'll still be able to identify the peak formations in a trend. The only difference is you got to know what to look for. Reset. What could possibly be setting you up for a reset? Okay. So like last week with the trend, I want to go through the characteristics because it's important that you understand a trend on a fundamental level. I don't mean fundamental as in like, well, the interest rate is doing this and therefore, blah, blah, blah. I mean what we're looking at, what we see. Okay? So this is the trend. And I'm going to move the questions over here. They're a little, there we go. Okay. I didn't really think that through. All right, the price on the main chart. We got our EMAs fanned out. We're beginning to fan. Beginning to fan? No, beginning to fan. Now, this is one of the things at the beginning. If we're catching a reversal, if we're trying to catch the beginning of a trend, they might be beginning to fan for, say, if we're catching it at level 1, we're catching the safety trade into the next level, and we're going to hold that for a couple days. So they're beginning to fan, but we all know we get to a chart and a trend is already underway. We can already see that they're nice and fanned out. Next thing we're looking for is a continuation, a reset. But they're consistently showing reverse of the direction of the trend, which, failed peaks or patterns. You'll see this a lot, just FP, okay? Because they consistently want to show, for example, in a downtrend, and I'm going to use a downtrend example a lot of the times throughout this. So just know that it's the reverse if we're talking about an uptrend. In a downtrend, you start getting a lot of W's, okay? At the bottom of each level, you start to get what look like a lot of W's, a lot of quote-unquote P formation looking kind of things, double bottoms, right? Why? They want to consistently show, ooh, this is reversing, this is the end, especially if they're coming out of a previous uptrend, right? Why? Because people, they got that in their mind. It's been an uptrend. This is just a pullback. It's going to go back towards the top. All right, now one of the standard things that everybody knows usually is lower highs and higher lows, specifically during resets. So in a downtrend, you'll get lower highs. In an uptrend, you'll get higher lows. But specifically, I want to talk about later the lower highs during the resets and how you can use that to identify like, see, they're not really getting out of there. They're going to continue down. Jagged moves away from the direction of the trend. So when you start to get these little reversal patterns that don't really work out, you'll start to get jagged moves away from that direction. It's kind of a burst hold pattern. Burst hold, burst hold. All right, and when they're doing that, you'll start to see heavy avoidance of trap volume over there to the left, usually at the previous area that they kind of hovered and made it look like they were going to go up, which in turn leads to heavy use of zone flips, especially on the 4-hour. Now, all this stuff obviously, well, hopefully obviously, since I said it before, it can also be applied to the H1. These are all, it's fractal, so it boils down. Now, the TDI characteristics. In the beginning, your market baseline is crossing over your fixed 50 to potentially begin a trend, okay? That's usually a little bit after level 1, all right? Now, underway, the market baseline is, I refer to it as a unidirectional flow state, which means, it's just a fancy way of basically saying the market baseline starts to stay on one side of the fixed 50. What was one of the characteristics of a range bound? Well, the market baseline flowing up and over that fixed 50, and the bands kind of like equally enveloping that fixed 50. There's no true direction. But once a trend starts to get underway, that market baseline, it crosses over and it kind of stays there. Now, in a stronger trend, the TDI as a whole moves to one side of the fixed 50. Now, we focus on the market baseline and we look heavily at the RSI, and then the signal line, we should consider that. I see a lot of people don't. Most of the time when people post trades, why didn't this work? It's like, well, it didn't cross the signal line. It wasn't on the proper side of the market baseline, the RSI meaning. But the volatility band seems to be kind of just this thing that's there only to create a shark fin Twitter response. People just kind of ignore it. But you'll see in a strong trend, TDI as a whole, the entire body of TDI, the bands, the market baseline, and the RSI, shift to one side of the fixed 50, and they kind of remain there. Just with the bands and the RSI slightly tapping the fixed 50 once in a while. And those are the extremes. We'll look at it. Now, the RSI, at the very beginning of your trend, it starts to become divergent, right, crossing the market baseline. This is your peak. It starts to become divergent. Now, when it crosses over the market baseline, that market baseline is actually up, will be up towards the actual overbought, oversold. Again, I'm going to use the short, on the short side, the downtrend. So your market baseline gets actually close to those, those lines up there at top, the overbought, okay? The RSI immediately starts crossing over, and then you start presenting with a baseline bounce. And this is why I like to, I don't directly take most of the time pure divergence. Like, oh, it's divergent, I'm going to take it. I wait for the market baseline to get below, say, in a downtrend, the beginning of a downtrend. You have your big M formation. I'm waiting for that second leg to shift away, the RSI to get underneath that market baseline and come back up and smack that market baseline and reject off of it. That's what I like to look like. Now, underway, well, it's down under the market baseline or over the market baseline, but it's hitting the bands and the market baseline. It's extending outside of the bands, and its high becomes the market baseline. It starts bouncing off that market baseline. Constant baseline bounces. Now, in the strong trend, that's, remember, when you have the TDI as a whole down underneath the fixed 50 in a downtrend, you'll have the constant extremes. It keeps hitting oversold. And your stop hunts and your pullbacks and your resets, they tend to happen at the fixed 50 and the upper bands, and of course the lower bands if we're in an uptrend. Okay. This is very important to remember, because one of the things that killed me a couple years ago when I first joined the original study group that like prompted all the different study groups. Okay, there was a guy in there because I was getting killed on some trades after I was doing really well, and I was like, what the heck? It was divergent. It's at the extremes. Isn't this supposed to reverse? And he pointed out, that RSI stands for Relative Strength Index, and that in a trend, it's commonly studied for RSI that the extremes actually will start to show strength to certain systems, to certain trading methods that people adhere to, that people will look for to hit the extremes before they even think about buying or selling. And I was like, wow, I never knew that. And he started actually referring it to over strength or, over weakness. And I was like, wow, okay, it was a bit of a paradigm shift for me. I didn't know my lesson because I wasn't doing the homework, but you all know that story. Now, what about the sentiment in the systems? We talked about that last week for the range bound. I'm not going to rehash that right now. But the sentiment and the systems are the belief structures that it creates in the people, the emotions that it generates, and the signals that it triggers within the systems, whether it be robots, EAs, which, well, they're the same thing, algos, different, just computer systems out there, black box systems, and of course discretionary systems that people follow but they manually enter. Now let's look at trader participation. First of all, I have to take a drink. 1 second, please. Okay, sorry about that. The mental and emotional states. Now, last time I was just talking about just in general the traders, but with trend, if you really think about it, you're going to have two types of traders going on, right? Because you have trend followers, you have support and resistance traders. So that kind of creates just this dynamic of two kind of traders out there, ones that are really wanting to keep going and they like trends, and other ones who just, they're not buying it. Okay, so that gives us the believers and the skeptics. And the skeptics are the bottom feeders, or the top pickers. Okay, oh, this is the top, etc. So what do we have in the believers? They get all excited, like, ooh, momentum, the I'm missing it kind of people. Look at those, the trend lines, the moving averages, they're all fanned out. It gets them excited. Okay, new highs, new lows, it's never going to stop, all that kind of stuff. All right. Now these believers, they wait for certain areas to be true. They don't just go, oh, I think this is a trend. Well, there's plenty of people that do. Usually the believers, what does Steve say about why they do 3 pushes, why they move a certain amount? Why do they move 250 pips to 500 pips? Because they have to create the belief in these traders that, yes, this is a trend. It's true. It's going. And then what happens? Well, that's when the market makers step in. They go, all right, peak formation now. And that's where the believer has gotten jammed up. Okay? Now what about the skeptics? The skeptics are the ones that are left over from the uptrend or the chopping mode that just happened. The trends happen after a reversal to the high side in a downtrend, obviously, or coming out of some form of range bound. So some form of psychological, again, I hate the word, but a paradigm has been created for them. They're in this mental mode of like, we're in range bound. So this is what happens with them. In a downtrend, for example, they're always trying to pick the bottom. Remember, I said you're constantly seeing false patterns. You're constantly seeing false peaks. And that's what they're doing. They're jamming these people up. Whether it be, oh, this is the pullback to continue the previous uptrend, or, oh, no, they just broke this range and now they're reversing back into it. Aha, it was false. Okay? Now, eventually, what do? They hit peak formation. They've got the believers jammed up down at the absolute low. They started buying at the absolute low, especially if you got a second leg that went past the first leg. And the skeptics, they're done picking the bottom. So what do? They're going to wait for a specific area for price to cross, or the golden cross, which if you don't know, that's the 50 crossing the 200. All right? That's when they go, oh, I'm going to get in right now. This is good. Now I know. Now I got some momentum away from the bottom. The price has moved away from the bottom. And at this point in the resets, the indicators start moving over and whatnot. That's a couple slides from now, I think. But then what happens? Yep. There you go. All right, we got him. Roll the reset. Now the skeptic is like, oh, my God, this is okay. Now, eventually, what happens is the skeptics become the believers, and the believers the skeptics. And both at precisely the worst time. All right? Think about it. You're in a trend. You're a believer. You see the trend going. You finally get in. All of a sudden, level 3 starts happening. You get whipsawed. Now you're done. Now you're considering, oh, well, it must be going the other way. The guy trading back the other way, the bottom feeder the entire time, the skeptic, finally, he starts committing, okay, well, now it's finally going to go down. He gets whipsawed, and then, okay, here's the bottom, and he gets caught in a reset. Well, it's just the worst possible time for both of them, okay? Now, what about the system activation, the technical states, validating the technicals? Well, it can be fairly simple. The breakouts, okay, you're getting a lot of breakouts. Somebody mentioned that before, break of previous limits. I think that was Jim. And of course, the momentum oscillators, the moving averages, they start to fan out. They get people excited. Okay. The larger moving averages start crossing over as they start fanning. Maybe you're crossing over that 4-hour 200. All right, if you were in a previous uptrend. So these start screaming both continuation and reversal depending on what personality you are. Remember what I said. There's systems out there, there's trend following systems out there that basically say, wait till it breaks this new level and wait till your RSI or your MACD or whatever is showing like extreme overbought or oversold. Because if you read a lot of interviews with the hedge fund managers and the people who really follow the trading systems, a lot of the old world, not old world, but the old trading wisdom out there is you want to, honestly, the trend followers say you want to buy at new highs because that shows strength. There's a lot of people out there that make a lot of money that trade based on that kind of principle. At the same time, you look at a lot of the track records and, some of the best funds out there only work on like a 30-40% hit rate. They just have extremely, extremely tight money management. So kind of keep that in mind as far as how it's triggering people and how the systems might be saying, hey, you know what? It broke this area. It's a new high. It's a new low. It's time to get in. All right? Now, what about the reset itself? And I still get this all the time. There's a couple times this week. Why didn't this work? What's going on here? Why are they holding this for 3 or 4 days? And again, it's the same answer as last week with the range bound. The money. You have to understand the reset. You have to understand what the market makers are doing, right? So what's the purpose? To book a profit. They've just been dropping 3, 5, 10 days nonstop. They got to book a profit. They're at their limits. But they're also inducing traders in the other direction to create that reversal scenario, the bottom of the top, for those bottom feeders. They've already trapped the believers that are jumping on late, all the people that just can't miss it anymore, the ones that have been induced by 250 to 500 pips by 3 days of like, oh, God, I'm missing it. So they're inducing both those traders at that peak, at the reset. So they're hitting the low, maybe extending the low, coming back, creating a larger structure. All right, and they're whipsawing them. And it allows the market makers to book rapid profits in both directions from both of those two different personalities. This is definitely the bottom. This is definitely the bottom. See, it's definitely going down. It's definitely continuing. So it allows the market makers to load up their book at a discount before trend continuation. Because if you continually show that it's a double bottom or a double top or a triple top bottom or triple top, and people start taking it at crosses, moves past a certain price point, reaching, and I know some of this might be hard to keep up with mentally for some people that are newer or haven't really thought about this a lot, but we're going to look at the charts. It allows them to continually get the orders in the direction that they're going to go at a discount. Think about a bottom peak, right? Before they reset, they're showing a double bottom. They're rising that price. As the price is going up, people are like, oh, now it's going to reverse. They start showing up. The momentum indicators start rolling back over, start showing that, a reversal is imminent. Okay? You'll see those jagged price movements that I talked about. And people start buying up. Well, who's selling to them? The market makers. Now that they're selling to them, people are buying up the order. Cool, they got their books in line. Let's drop it another 3 levels. Someone said they want to start a no discount for the market makers campaign. That's right. Once you understand the reset, if you can accurately foretell that one might be in order, you can avoid that kind of inducement yourself. All right, so what about the characteristics of price? Sorry, I had to take a drink there. Level 3 behavior. It's definitely level 3 behavior. In swings. It may be only for a couple days. It may be for a couple weeks. All right? Lower highs and higher lows. And that's kind of the same thing I was talking about before, but particularly this is going to, this is in line with the hidden divergence that I'll be talking about, okay? Where you'll get a peak, you'll get like a first leg, again, downtrend. You'll get that first leg, it rises up, it gives you the middle of the structure, comes back down, hits that second leg. They start giving you what looks, oh, this could be level 1 to us. Other people just start seeing double bottom, it's rising. I'm going to wait for this. They start rising the price, and they'll start to fail at the middle. Okay, they'll take their sweet time getting up towards the middle, just enough time to get the moving averages in line, to bring the moving averages closer, so they can get them to cross, maybe hit the mayonnaise, okay, without releasing that trap volume that's at the middle, and then they start dropping. And these are the failing peaks, and that's what I'm talking about, at the middle of the structure. At the last level of consolidation before the second leg, I'll talk about that. You might be like, what? That's more in line for the larger structures, and something else I call the 3x3s. It's kind of like a market maker cycle, but not really, because you don't get really the full 3 levels. It might only be 1 times ADR, but you can see 3 clear bursts. And of course, not really getting out of there. You'll see, if you really take the time to compare peaks, go resets, which are really simple. You can just look and be like, this was a W that continued to go down. This was a W that worked. Okay, snapshot, compare them. You'll start to see some really interesting stuff. Okay, they zone flip a lot with the resets, especially on the 4-hour. They stay off the trap volume to the left, and they do what I call laying down the mat, which I call, the mat stands for moving average tug, all right? And they hold a level to, like I said earlier, to bring the moving averages in line with previous trap volume, so now they can smack into the moving average, not release that trap volume to the left, but still trigger a ton of orders. All right? Sorry, I had to cough there. So how about TDI specific? Characteristics on the TDI. Oh my God, all these characteristics. We're going to look, and you'll see they're not that hard. You're going to need to go back and really take notes on this and go look at it. But once you do, hopefully you'll really see, like, wow, this is kind of simple. Characteristics on the TDI for the reset. TDI starts moving towards the area. I already discussed that. Not going to rehash it. You'll see it in the pictures. The market baseline begins to move across. Same thing. It begins to move across the fixed 50, but it's just kind of eking up. What did I say? They start to get the momentum indicators, the oscillators, to roll over. Gloria, I said like 3 times. I'm going to show pictures. The market baseline begins to move across the fixed 50, but kind of slowly, all right? They just start to roll over. They get people antsy. Remember from one of my first 2 presentations, they use time as their most powerful weapon. I asked that in the first 2. What's the most powerful weapon they have? Time. They'll take their sweet time just to get the stuff to start to pinch up and roll across. All right? You get the band start to pinching, and TDI as a whole goes around the fixed 50, which shows no true direction. That's that range bound area. RSI starts producing jagged. Oh, okay. That kind of threw me the way I wrote that. That was horrible. So the RSI becomes a bit jagged in its move up. It's not really showing any momentum, and it's shark fitting the upper and lower bands, depending on the actual trend. And of course, the RSI shows the hidden divergence. Now, when I look for a reset, I like to catch it towards the middle of the structure. All right. Again, if we're in a downtrend, they'll throw a W as your reset, right? So I start to look for these things on the TDI, for these characteristics on the TDI, and then look for the RSI to head back across the market baseline in the direction of the peak, in this case, the W, the downtrend, and specifically for baseline bounces and what I call signal line shark fins. And actually, I should have removed that. I'm not going to talk about that tonight. Back in the direction of the peak. Now here's a trend example. Here you go, Gloria. Okay. So we see the beginning up here. We see the divergence. Well, actually, I kind of cut that off, but it's divergent. All right. We see it shift over and come below the market baseline. We don't know a trend is imminent here. But this is why I really like to wait for this, because this will start to happen at a peak, near the peak, and then when I see the actual second leg throw up, produce, the market makers throw that second leg, and this is all I get, that's what I really like, okay? Now, as it starts to roll over, you start to get into level 1, and then once you're in that trend, what do you start to notice multiple hits to the oversold, in this case, a downtrend. And where are the extremes? At the bands, at the fixed 50. Now, when you're doing the TDI drill, as I've talked about before, and Steve, told everybody to do, a lot of times this gets confusing. Like, all right, well, I see, where's my 1, 2, 3? Is this 1? Is this 2? Is this 3? Well, it can get a bit confusing if you're just looking at like, all right, well, I'm expecting it to go up and then outside of the bands and then into overbought territory, because that's just the way it goes, and that's not the way it goes in a trend. Remember, range bound, it's not really hitting either. And the market baseline's up over the fixed 50. Where's the market baseline during this entire time over the course of these 2 weeks? All right. Now, here, this is H1 right now. It's pretty much the same thing. Somebody asked, is this H4 TDI? And thank you so much for putting the double dashes in there. Some people remembered. Is it 1 hour TDI or 15 minute? Nothing is 15 minute with what I discussed. There's enough 15 minute instruction out there that really there's no place for me to talk about M15. Like all that stuff that Jim and Carr and Joe and Steve talk about on the M15, I just apply it to this. I look at the H4, H1 with this kind of mentality, and then to tighten my entries, that's when I go down to the M15. Okay, but you can see the TDI here is pretty much it. This is that unidirectional flow. Now, this right here, take a look at this. And I'm going to show you the price on the chart, so don't worry. This is where we start to see a bit of a reset, okay? This is where the market baseline starts to slope up over that fixed 50, and then they rocket back down, all right? It's subtle, but when you see this combined with the price, and if you study this enough, you'll start to see that, okay, well, here's my W, and here's my peak formation, and let me get up out of this area. I'm going to take this long, but this is that jagged, it's not really going anywhere kind of move I'm talking about, all right? Now, when I start to see that combined with the price, I start to go, aha, this could be a reset. Let me look to the left. Let me see if they're flipping the zone. Let me see if they're avoiding trapped volume. All right. So if you haven't, take a screenshot of that. Okay. This is that same exact TDI. This is the chart that it came from. You can see up here, we have this aggressive burst, and then they come up, and this is your M formation. It's not quite perfect where it's up there and hitting that quarter point, but this is what I'm talking about. We never had a close over the 50 with the 13, but we're sloped up under that market baseline, and then we come back and smack off of it. And as you can see, it starts to roll over, but then they give one more time before they actually do roll over. That gives us our next baseline bounce, and that's what I said. The market baseline starts to roll over, and you'll start to see these baseline bounces and exiting the bands, all right? Now it goes into this, what do you see? You see this pullback, upper bands, fixed 50. They don't even give you the next level drop, upper bands, your next level drop, oversold. Next pullback area, upper bands, fixed 50. Next level drop, oversold. Now they go into a reset. They give you a sort of peak formation level 3 kind of behavior, wings, chopping, okay? If you can't see that that's level 3 behavior, you need to study some level 3s some more. Even this started showing some level 3 behavior. But look at the moving averages. This is the kind of stuff you have to expect from what I talked about last week with the H4 range bound. Okay, what do? Zone flip. Okay, they come back, they come back down towards this peak, and they break it. They show a little bit of a W. Imagine the hard right edge. Okay, you're a skeptic. We were rolling up. You got excited. You were a believer over here. Okay, so now you're a skeptic of this downtrend. You're thinking it's going to keep going back up. Oh, this must be the W, hard right edge. All right, well, they nail you. They start rolling over, and this is some of the places that people get jammed up. 13 cross the 50 must be my level 1. Where's my safety trade? You get a little bit of a 50 bounce here, but they're hovering. They're working this area. They're working this previous trapped volume of anybody that went long here. but it's slow and purposeful to get this stuff to roll over. And if you look, you'll see they didn't release that trap volume. Anybody that got excited that, yeah, now it's going back up, well, they just roll over. And what did I say? I wait for it to get back below the market baseline and start doing some baseline bounces. Okay, in this area, you'll start to see the baseline bounces. There's a little signal line shark fin here. Again, not really discussing it, but I may have gotten in right around here. This is some of the stuff you have to suffer through. Okay, one, I would have been looking for a larger structure, which we're going to be talking about the next presentation. And a larger structure is just a multi-week or even a month-long structure. But the size of this middle, where this middle is, okay. I'm just looking for it to come back here, and they just kept going. So this is a great image of what your reset will look like on your TDI. You know, again, the bands start pinching, they actually start rolling the market baseline above, and then it's just over, and yeah, then the failure comes in. Now you really start to get your moving averages nice and fanned out. All right. Now that was a trend example with some reset example. F%0B looks like a great area to get in. Oh, F50. Yeah, if you can, look, this takes some practice, because I'll say it again, I said it last week. Steve already went into depth on this very topic. It just took me 5 years to realize it. And I had watched the videos a dozen times. I'm talking about the boot camp and how to use the TDI and the RSI. He talks about this stuff, but I just watched him, took what I thought was a copious amounts of notes, and it actually was. It was probably way more than I actually needed to. I could probably caption his videos at this point with the notes that I took. And it just, I didn't homework it, so in one ear, out the other. But yes, once you start homeworking this stuff and you start to be able to recognize, aha, we're in the beginning of, then you can start to look for exactly what you just said, the fixed 50 and the upper bands in a downtrend, or the fixed 50 and the lower bands in a downtrend, in an uptrend, I'm sorry. Okay, so let's take a look specifically at another reset example. This, look at that. This is a 4-hour. In case anyone's wondering, I know somebody's going to ask, this is a 4-hour. You can tell by the lack of daily dotted lines, the dotted vertical lines to separate the periods, and Jim's AFP weekly line indicator, which if you don't have that on your charts, I highly recommend it. It breaks up the weeks. The weekly cycle is hugely important. So here we have a reset that occurs over about a month and a half. What was that? 1, 2, 3, 4, 5, 6, 7, almost 2 months reset going on here, right? All right, I got to move the questions up a little. I'll move them over here. I'm not going to be looking at questions right now. What do we see? Angle and separation, 3 bursts down. We start to get a P formation. Notice they stay off this trap volume. How many people right here? It's rejecting off the 115, right? It's rejecting off the 115. Okay, they start showing pins. Look down on. Can you see the W that might have been occurring, or not might have, did occur on the H1? What that might have looked like on the 15? That kind of stuff. All right. They shift down. They come back up. They create the middle of this larger structure, and you can see 1, 2, 3 down into this structure. They take it away. Now, okay, the bottom feeders have been tricked all the way down. They're waiting for certain things to happen. They're waiting for crosses. Okay. The believers are still waiting for a continuation. Break this area. So they start working this, they start working this, they work this, they hold. What happens? This stuff starts rolling over, okay? During this chopping, this is a tight kind of range-bound area on the H4. It's more range-bound on the H1, but this is what I just dubbed consolidation on the H4. Consolidation on the H4 is more range-bound on the H1. This tighter move kind of stuff happening here, and this does this along the fixed 50. Okay, it's not even range bound. It's just it's garbage. This starts that they're holding the level, waiting for either that larger structure, which will produce, or a reset. Now, remember what I said about the jagged upward movement of the RSI. You get the same thing here, and they start to create what looks like, oh, now it's finally going over. Because during these 3 weeks, it's like it's over, then it's under, then it's actually right on. And all the different oscillators, they have similar behaviors as far as the midline rolling over and producing these little signals, okay? So now they start to produce like, now we're getting some momentum. This is climbing up, okay? But what we also should notice when we're taking stock of these larger structures, there's no reason we can't grab the stuff. Look, you can see on the H4, you can see the little safety, bam, okay? But it's not getting out of there. It's taking its sweet time. And two, they've created this area of trapped volume that they have not released. They have stayed off of it. They have stayed off of it. They have stayed off of it. Now they're coming back up. What else do I see? Remember I talked about laying down the mat. What did they produce, or what situation did they create by holding this level this entire time? Someone is saying no sound. Did I cut out there for a while? Or did I just stop talking and somebody thought I cut out? Yes, Greg. Thank you, Stephen. Yes, Greg, Attican, the mat. They are laying down the mat. This is something, when you start to see them holding something forever, it seems, start looking towards a larger moving average that was away, that is now coming in close to areas of trapped volume. Someone's asking, what is the mat again? Moving average tug. I've seen that during the GU H4 homework. Oh, that's right, guys. I completed for everyone that turned in the pound swing homework, I have that completed. I swear I'm going to send that out tonight. I just wanted to hold off. I'm like, you know what? There's a lot of stuff on there that I put in the legend that I'm going to be covering tonight. I don't want them to be confused, so I'm going to send that out to all you guys tonight, all right? Appreciate your patience on that. I'm very, very sorry about the wait on that. Okay, so yes, the moving average tug. That's just my little name laying down the mat for when they hold an area long enough to bring a nice, juicy, large moving average into the area, break this without releasing any. They've created skeptics and believers out of this entire thing. Oh my God, that's a triple top. It's really going to go now. Look at the momentum. Look at the oscillators. It's closing above this area. It's the 13 is crossing, the 20 is crossing the 30, the 30 is crossing the 60. There's tons of different moving crossing overs and oscillations happening all over the place, but this is, seeing as how I don't use any of those, I notice consistently that they will wait to pull in. Sometimes it's just the 50, but a lot of times it's the H4 200, which translates into the H1 Blueberry, and they'll do the same thing on the M15. You can translate this down to the M15. You'll see they're holding this level. They're holding this level. It's only push 2 or whatever. All of a sudden they're holding, and what happens? The 50 gets moved into that area. They get to smack into that 50, not release the previous trap volume. So that's what happened here. Now let's zoom out a little bit. Okay? Here it is closer. What happened? The believers jumped on here. Cool. The skeptics got beat up all the way over here. Look at this W. Look at that W right here. Beginning of the week. Oh, now it's going to move up. No, sorry. Thanks for your account. We're going to create this W right here that I talked about on the H1. It looks like a nice W. It's so choppy. I don't believe the trend is going to go any further. I'm going to get in long here. Cool. Thanks. Really appreciate your account. Okay? Big railroad track trap for all the people that now go, oh, I got to get in here. And the skeptics, they're not buying it anymore. But anybody that did go short, well, they're going to stop them out. They're not going to release the trap volumes of the pins. They now create this wall right here. Okay? Where did that occur? Right there. Now, this is where you'll start to see the hidden divergence that I talked about. They start creating lower highs. These are pullbacks. They start stopping and rejecting. What's going on? Why? They're staying off of this, even this trap volume right in here. Okay? This last, what do I always say? That people got screwed. Last area. That's a bullish continuation candle for most people. That probably looks really tasty on the H1. All right? So they're stopping that area. anybody who's long in this pin. They're stopping in that area. But this is higher than this, okay? This right here is still higher than that, all right? Then it starts weakening again. We get a rollover, and bam, baseline shark fin. You take that back down to the bottom. I love larger structures, especially taking this failure crap in the middle where they start telling me, yeah, no, it's not going to work. Rollover, shark fin at the baseline. I still consider that a baseline bounce, okay? And then roll over. They start throwing, this is the end of the week. I'm not taking this. This would be great any other day, but I don't hold Pacific pairs, Aussie, New Zealand, anything yen. I need Pacific pairs over the weekend. I don't do it. Those they tend to gap a lot more. But if you did take this, you're good. You can recognize this as an inducement back here to get the believers on board again and then trap and roll over. But now the mayonnaise is into the last area that people got screwed, right here, right here. It's down into this area. What do they get to do? They get to smack into that, close over it, oscillate this stuff up, and then roll over. So this is the kind of stuff that I want you to focus on for looking at resets, for identifying trends. So I want to take you to the terminal now. And guess what? I actually had it open this week. Because I want to show you, and actually I can bring up the questions now. All right. I discussed last time in one of the emails that I was going to show you some things that I like to do that Steve talked about a while in a different venue that me and Carr and Marta, hey there Marta, again, we all attended, and he did this thing that thoroughly drove me insane and everybody in the class insane. I'll show a little bit to you right now. Not the exact templates that he used, but what he did, this is how I want you to set up your charts. Any chart that you want, okay? What I'd like you to do is you're going to go into your properties, which is the F8 key on your keyboard, or for you mouse junkies, you can go right-click on your chart and hit properties. You're going to go to line graph, and you're going to set it to none. All right? Now, the line graph, if you set that to none, and then you set your actual price action to line charts, which is also Alt-3, candles is Alt-2. That's native within the terminal. That is not my homework helper or anything. So if you hit Alt-3, now, what do you know? There's no price. You get to just look at moving averages. Okay, we just discussed moving averages, TDI. Can really help you just zone in and ignore all the crap, the noise that is the price action that gets people jammed up. All right. Now, what he would do is he would, God, it drove us nuts. He gave us 5 seconds to look at an H4 chart, an H1 chart, and then the M15 to say, okay, we're down on the H4, but we're really fanned out on the H1, so that's a P formation. And now the M15, there we go. They're just creating this kind of thing. I'm looking for a long P formation trade long. So that's what I would like you to do. And you don't need the homework helper. Like, I use my hard right edge, but you can just put stuff up against. Let me take off this BPCT, delete, okay. So one of the things you can look at, all right, we take in our H4, all right. We see trend behavior. This was trending for a little bit, about 3 weeks, and we're starting to roll up, okay. What could, well, overall, we have our moving averages in what kind of behavior? No one? Really? The moving averages are signaling level 3 fanning out in the middle. Right, they're starting to fan out. They were in range bound. Look, this is the TDI I'm talking about. This was range bound behavior. Look at all this. Okay, now we have our peak. It's rolled over the entire TDI. I just hit the home key on this. I went back, I just hit the home key. I just went to a random spot. Right into trend behavior, okay? And this is potential, right, level 4 reset. This could be possible reset, all right? Now, due to the nature that we just crossed over, we were coming from a downtrend, and then this looks like a potential larger structure that failed. That's what I see, a potential larger structure that failed. Okay, so now, yes, we could be looking at another reset due to this. We want to see how long it takes to get up. Do we start to see just like that jagged behavior, that kind of thing? Can you put a line on that peak? Now, what you would do next is you'd go, okay, I'm looking for a possible reset. The EMAs are starting to fan out, but we know because they're in close proximity, they could come back up in here, and it's a cross. They could come back all the way to the peak. That's another thing I wanted to discuss. I will discuss that when we get to the larger structures. But now, seeing what we have here, this isn't something that Steve told us to do. We just had like 5 seconds to look at the H4. On the H1, so let's take a look at the H1. I'm going to actually do the hard right edge. Okay. That's potential reversal, but then again, what W's? Do you see the W here? You can, if you learn to look at this stuff, you can see the price action that failed. Oh, is this going to be the W? Okay, is this W? Is this going to go up? We don't know. Okay, so, but we have that in mind. Stuff is starting to roll over. What if we go down to the H1? H4, H1. Now we see TDI. It's not quite getting into the trend, right? It's taking its sweet time, rolling up, rolling up, rolling up. And now it's starting to cross over. What potentially happened right here? Just discussing, okay? Down at the bottom here, who do we have trapped now? The believers, all right? They say, oh, the believer, okay, 135. It started potentially, we don't know the price. The price could have broke right here, right? Specifically, we have a shark fin action going on here. That tells me, okay, now the skeptics that have been fighting this the entire way, they're finally beat up. They're waiting for us, right? So I might be looking for either a reset, but at least a larger structure. This is the I'd be looking for. Shot down. And now what you want to do at this point is as you start to make predictions and you move forward with just your RSI and just your TDI, okay, we set it up so that price doesn't show up. But now if we hit Alt-2, we can start to see, and what do you know? That was the aggression. They went a bit lower. Came up. Look at this. You see that? Oh, it came up once, twice, third. They're inducing. Okay, now let's take a look. What do we see? Where did they stop? Was there any sort of trapped volume over here, consolidation level? Well, what happened over here? That could have been a W if you're eager enough to make money. If you've been losing this entire way, now it's a W. Now it's a W. Damn it. Skeptics. So skeptics that are still trapped there. They're over. We're in the consolidation. The 50 is back over the 200. There's a myriad of things that could happen, but we are in a consolidation area. We finally hit overbought. up into a potential trend, uptrend on the H1 now. The TDI is over, okay? Now, specifically with the crosses, I know a lot of people are heavy on the crosses. You can oscillate between 500 pips for months, okay? And you'll see trends move down for a couple weeks and then turn into trends that move up for a couple weeks, especially when you're around this H1 blueberry. All right, because they want to cross over. They want to get the orders triggered. If we go back to the H4, we miss on there. Now things start to possibly make sense. Well, we have this big peak over here. Now we have a big H4 kind of head and shoulders, a multi-week head and shoulders. All right. Seeing as how they're in such close proximity, we may very well get consistent crossing over and whatnot. But seeing the way the chart looks without the price, you can really kind of see like, oh, yeah, there was that W that failed. There was that W failed. Here's the third W that's failed. Now they're going to create some kind of momentum. Now that and you can see, even on the daily, what happened. This is a kind of a big daily reset, isn't it? Big P formation, all right? They go into this kind of behavior, roll over, hit the stops, and rise. Now, what I'd like you to do is take all the stuff I discussed and really just get rid of price, look at the moving averages, and try and just assess. Go to random spots and try and assess what I'm talking about with potential, the moving averages starting to fan out to produce, okay? And take your price off, throw your price back on. It's as simple as Alt 3, Alt 2, Alt 3, Alt 2. You know, check every once in a while. Move forward a couple bars. So I'll get rid of that. Move forward a couple bars. Okay, is this, you know, this level 3 consolidation? It's moved up plenty. What do? They're holding the level. I would recommend starting to do this on your majors. All right, start this on your majors. All right, now that's really about it. Is there any questions? Is there anything unclear? So I don't want to go too far over. We're going to put a lot of this together more comprehensively next week when I talk about larger structures, because some things kind of don't line up, and it's like, well, what happened here? It's like, well, that was a larger structure. So any questions right now with anything that I discussed? Put the price back on, please. There we go. No questions? Just continuing to do the H4 homework. Loving it. Thank you very much, Stephen. Clear as, and then nothing. So does that mean it's not clear? Okay, if there's no questions, I guess we could just leave it straight at the 1 hour mark. Got to work with it. Can't get candles to disappear. Once again, go right-click, go to the properties. Make sure in your colors tab the line graph is set to none, and then you hit OK. Right now on here, you can either hit Alt F, or not Alt F3, sorry, Alt 3 as a hotkey, or you just click this little up here. Once you do that, it should disappear. Need the recording so you can retain it. Yes. Yeah, absolutely. But most importantly, you know, obviously going back and really looking at this, it's real easy to go back and just find peaks. Okay, guys? That's what's real important, to really find peaks and go, okay, what happened to that peak? Just take a look at this. I mean, here. You're oversold, or you're overbought, I'm sorry, okay? And then it's like, all right, what's happening? It's consistently hitting this overbought territory, and it just keeps going and going and going. This is a really strong trend because it's not even hitting the fixed 50. Then you get into this area, and what do you see? It's just consistently failing. It's rolling along that water. Okay, that tells you it's strong. That they're likely. They don't have, but they can just make that second leg a little bit higher. I think there's something with the yen. There was some issues today. I saw some people took this. There was a harmonic. There was some patterns, but it's this slow crawl that kills us all. Ooh, I like that. Okay, but yes, extreme overbought, and it's like, okay, well, I'm starting to get divergence, right? Don't I see divergence? So I must take this short. Isn't that baseline bounce that Doug talks about? Yeah. There's nothing wrong with looking at it. Of course, this is the H4. I look at the H4 merely as confirmation, but if you dial down, there's some stuff you might have taken if you haven't really looked at some things. And there's nothing wrong with some of these entries. But look, I see this as a reset on Friday. Just the way they close there, they gap rolling up, and I can completely understand how some people started to take. Didn't I just say, like, once you're in an extreme, okay, what do they start doing before a reset? They start rolling this over. They're like, oh, yeah, that market baseline is starting to go down. The MACD is starting to fail. It's getting weaker, and then they just keep going up. Okay, so look at your peaks. Go back and take some screenshots of valid peaks. It's easy. You just look, where did it reverse? Cool, there's a valid peak. Let me look at it, analyze it. Sometimes the peaks are ugly and don't really have much of what you could have taken. That's fine. Discard that. Be like, yeah, I don't like that. But also try and look for these reset patterns and take a picture of where it would have looked like a peak, okay? Actually, would people see that and go, oh, this is a peak? Take a snapshot before and after. What could have given it away that, you know what, this was going to fail, it was going to reset, it was going to continue? Well, didn't really create any momentum. That market baseline was staying above the fixed 50, and it was just rejecting off of that water. If you took this near the high, well, start getting out right about there. If you're doing the swing trade, if you're just taking 30 or 40, bam, you nailed it right there. Tracer, double, I was about to say double top, M formation. Multi-pattern at the trace, good. You took it, bam, 40 pips down to the water, or something close. Nearly 50 down in the water. So do that. Look for your peaks, look for your resets, and then with the notes, going back, looking at what I said, start to compare what the moving averages are doing with the TDI, what the price is doing with the TDI. Look for that hidden divergence for the user structures. Look for the way the RSI is jagged for a reset, and the way the RSI just takes off out of there, an actual move out of there. It gets outside of the bands, just exits the bands, comes back in, just kind of scoops that signal line, those kind of things. And put together, a nice series and drill that stuff in you. Particularly, I would say, look at the peaks that definitely have all the confluences that I talk about, with the quarter points, 50 above, 50 below, head and shoulders with baseline divergence. Look for those specifically, and you'll start to see the actual resets don't really have that all. That H1 had band divergence, chops, classic divergence, ML divergence, market baseline, MLD. I'm not sure about that one. Yeah, but it was the way it was consistently failing. If this was your structure, notice that they're holding this level. They're holding this level. They're rejecting off there. They turned this top into the new bottom before the rising. And Steve actually talks about that in actually several of his boot camps and the main course. How once they break the, it's a zone flip. It's nothing we haven't talked about before, but you'll have to recognize basically the behavior of, okay, they're not getting out of there. All right, there's nothing wrong with taking this, with taking this kind of stuff that you see, and that's a peak formation, and I see all the different confluences, but you also, once you're in, and we're going to talk about this during the trade management one, 2 presentations from now, but you have to get in tune with the market and realize, like, yeah, you know what, they're not getting out of here. They're just showing a reversal to, get to trap the skeptics, to book their profit, to get the believers on, and get their money, and all the stuff we talked about earlier. So, but the more you study the peaks, you have to take an active approach, an active effort to really study the peaks and go what works, what doesn't, and let me look at the TDI to see if what Doug said made sense. Okay, if there's no more questions, not that there was many questions, I'm very surprised. I thought there would be a lot of questions for this trend stuff, but last call on the questions, and then we're going to close down for the evening. I want to get Joe out of here in bed. Okay, no one's really chiming in, so we'll end it there. Oh, what shows the trend is starting one more time? Oh, that's like 10, 20 slides ago, but it's. I wait for the clear level 3 behavior with the market baseline starting to slope up with baseline divergence, which the divergence from the 50 on the H1 at least, but on the H4 it's golden. But I'd like to see the RSI above and then baseline bounce. I mean, here's a great example. I don't know this is a peak formation until I really see. I mean, this is level 3 behavior right here. I mean, this is just clear on the board, but what do? Hit the stops high, hit the stops low, rise. That's the order they do it. If they're going to rise, they'll hit the stops high first and then hit the stops low. Why? They want to pick up the pendings, the people that are going to be going long, all the pendings above, this sweet spot and this little trapped volume area. They want to pick up those pendings and, of course, trigger people to just jump. They want to pick up those long orders first and then stop them out, and at the same time trigger the pending orders below here, hit this major sweet spot right here, this quarter point right here before they shift. What happens at the shift? Well, actually before the shift we start to get this baseline bounce. That's that signal line shark fin I talk about right here. I'll take that entry any day of the week. If I looked at dollar-yen enough, I probably should. We're getting some really good moves out of it. But that's where I look for the RSI to get on the other side of the market baseline and then give me a baseline bounce with a hard shift. That's what I really look for to tell me, like, oh, yep, now it's reversing. Because otherwise, this could be a reset before this exit the band with that baseline bounce. All right? It's this behavior combined with that swoop, that baseline bounce and exit of the band. All right. It's all clear. Everything's clear. Everyone, thank you. Appreciate it. Okay, that's it tonight. We'll see you guys in 3 weeks. I'm not going to be here next week or the week after. Joe's taking over again, and then I believe Steve is coming after that. If you want to clarify that, Joe, you let them know. But as far as I know, that's the schedule. If you have any questions, please send your homework and questions to btmmswing@gmail.com. That's where everything gets sent. And again, you guys with the pound homework, I'll send that out tonight and get you all in shape. Thank you so much, Marta. Thank you, Lou, Greg, Attican, Glenn. Appreciate it. All right. Have a good night, everyone.